The letter comes from the insurance company, and it isn't a bill, coverage denied, or canceled, or renewed at a higher premium. Somewhere in the paragraph is the phrase that makes people stop reading and start over. The decision was based, at least in part, on information in a consumer report. So the driver requests the report. What comes back isn't a credit score. It's driving. A hard-braking event with a date and a time. Another 4 days later. A trip that started after midnight. An event recording speed above 80 miles an hour. Seatbelt status. Ignition on, ignition off. Trip after trip after trip. According to the Federal Trade Commission's complaint against GM and OnStar, the consumer reports built from this kind of data typically covered about 6 months of driving events, listed record by record with dates and times. The agency says some consumers found hundreds of records in theirs. Nobody handed this driver a device. No plug-in dongle, no app downloaded for a discount. So where does an insurance-related report get a record of how somebody drove? It came from the car. Now go backwards through that, because the chain is the whole story. Insurer, consumer report, data company, vehicle. There's a version of this that's completely ordinary, and it's been sold in America for years. Progressive offers a program called Snapshot. You enroll on purpose. Your driving gets measured. How you drive, how much you drive, when you drive. The company states plainly that higher-risk driving can raise your rate at renewal, depending on the program and your state. Most participants save. The company currently says roughly 2 in 10 see an increase. That's usage-based insurance working as advertised. You know you're being measured. You know an insurance company is the audience, and you know the result lands on your premium. What changes when the driver believes the tool measuring them is for something else entirely? That's where OnStar Smart Driver comes in. According to the FTC's complaint, Smart Driver was presented to consumers as a way to assess their own driving habits. The agency described features like driving insights, badges, and customized streaks. The complaint says consumer-facing language told drivers the data was being collected to show them their own driving activity. The FTC alleged that consumers were not adequately informed that their driving behavior data would be provided to consumer reporting agencies for insurance purposes. The driver thinks the score is for the driver. The same events can end up in a report written for somebody else. Here's the mechanism the complaint describes. When a driving event happened, the system could capture the event itself, hard acceleration, hard braking, speed over 80, seatbelt status, along with the vehicle identification number, a trip identifier, a timestamp, and precise geolocation. Then the ignition goes off. According to the complaint, that's when bundles of driver behavior data were transmitted to GM's systems. Some of that data was then transferred to third parties. The FTC says Verisk and LexisNexis used relevant driver behavior data to compile consumer reports. The driver walks into the house. The trip is over for the person. As information, it keeps moving. What does a hard-braking event actually know about why you braked? A deer comes out of the tree line. Traffic stops dead on the interstate. Somebody merges into your lane without looking, and you do exactly what a good driver should do. You hit the brakes hard, and nobody gets hurt. The vehicle records a hard-braking event. It records what happened to the car. It doesn't necessarily carry the entire human context of why it happened. That's not a scandal on its own. It's a measurement limit. It becomes economically important the moment that event enters a system capable of influencing coverage or price, because risk pricing runs on signals, and a signal doesn't have to be the whole truth to be usable. The speed events work the same way. No police officer ever pulled this driver over. No ticket, no citation, no court date, no points. A recorded event above 80 miles an hour is not proof of a violation and shouldn't be treated as one. So how does a high-speed event end up in an insurance-related report anyway? Because the vehicle itself could record it. The enforcement system was never involved. The measurement system was. According to the FTC's complaint, many consumers only discovered these consumer reports existed after they got adverse action notices from insurers, notices indicating that insurance had been denied, canceled, or that premiums had gone up based on negative information in a report. The FTC tied those reports to the driver behavior data described in its complaint. A drive is behavior. The vehicle turns that behavior into data. A third party turns that data into a consumer report. An insurer reads the report as part of a decision. The decision becomes money. Somewhere in that chain, driving became pricing. Was it when the driver braked? When the car recorded it? When the ignition shut off and the bundle transmitted? When a reporting agency compiled 6 months of it into a document? Or when an underwriter opened that document on a Tuesday morning? There's no checkout screen anywhere in that chain. The price is assembled downstream, out of events the customer never thought of as transactions. The FTC case also described a second, separate stream of data, worth a moment, because it shows what a connected vehicle can technically generate. Apart from the smart driver event reporting, the agency alleged a broader collection of precise geolocation from millions of GM vehicles. And for some vehicles, location could be collected roughly every 3 seconds. The complaint describes location records revealing routine travel between home and work and movement through a hospital parking garage. That's a different data flow with different implications, and it isn't primarily about insurance pricing. It's here for scale, what the raw material looks like before anyone decides what it's for. Now the relief, because this specific program is over. GM ended data sharing with LexisNexis and Verisk on March 20, 2024. In April 2024, it publicly announced it was discontinuing Smart Driver, and the FTC complaint says the feature was fully sunset in June 2024. GM's public position was that Smart Driver had been created to promote safer driving behavior for customers who chose to participate. So the arrangement described in the complaint isn't running today. So if the program ended, what didn't? The capability didn't. Turning driving behavior into insurance pricing signals is not an abandoned experiment. It's a functioning American product line, sold openly. Snapshot still exists. Drivers still enroll on purpose in exchange for the chance at a lower rate. That isn't the problem. That's the control group. 2 systems can use nearly identical data and produce completely different situations, and the difference has nothing to do with the technology. Who knew the measurement was happening? Who agreed to it? Who receives the data? What purpose was disclosed at the start? And whether the customer learns how driving reaches price before the pricing happens, or in a letter afterward. On January 14, 2026, the FTC finalized its order settling the allegations against GM and OnStar. The order imposes a 5-year prohibition on disclosing consumers' geolocation and driver behavior data to consumer reporting agencies. For the 20-year life of the order, GM must obtain affirmative express consent before collecting, using, or sharing connected vehicle data. Let consumers request a copy of their data and seek deletion, and provide ways to disable or opt out of certain collection with limited exceptions. It's a settlement of allegations, not an admission that every one of them was true and not a criminal proceeding. But look at what the government thought needed a rule. Not the driving. Not the sensors. The path the data was allowed to take after the driving was done. For 100 years, an auto insurance price was built out of things you could see coming. Your age, your address, your car, your claims, the ticket you actually got. A connected vehicle can generate something else, a record of the drive itself, produced by an object you already own, in a format built to be read by somebody who wasn't in the car. The dashboard shows speed, fuel, mileage. It has never had a line for what any of it might eventually be worth to a stranger. You thought the trip ended when you turned the key.